Let me ask you maybe a larger question about something else that's in the background, which is your push, and maybe it's not in the background, maybe it's in the forefront for you, your push to be effectively net zero, but specifically to reduce oil and gas production by 40% by 2030. Where are you on that, on the spectrum in terms of just the progress towards that?
So we are continuing to make progress on that journey. This is a journey that is first and foremost about value. We would do this whether there was an energy transition or not. We want to create the highest value hydrocarbon business that we can, not the largest hydrocarbon business. And sometimes that means that the barrel is better off in somebody else's hand. So we are step by step making our way through a disposal program. We've got a $25 billion divestment target by 2025. We're $15 billion of the way through that. We've got 10 to do over the next 4 to 5 years. So we're not in any rush. We'll take our time and we'll make sure that we get good prices for it. But it is the right thing for BP. It's going to help BP decarbonize over the next decade. It's going to help BP diversify. And we're going to use those funds, Andrew, to reinvest into our transition businesses. We're going to increase our investment in low carbon tenfold over the next decade, from about $500 million a year in 2019 to about $5 billion per annum. So that's what the transition is about. It's about a net zero direction with clear targets in the next 5 to 10 years.
I have a bit of a philosophical question for you, which is you're selling some of these businesses, and as a result, I believe the investor class effectively is re-rating you as a company that's interested in the climate, that may have a higher ESG rating and the like. And yet, of course, there is a buyer on the other end, right? There are folks that are going to buy some of these plants that will continue to produce carbon. And I wonder how you think more broadly policymakers should think about that.
Yeah, no, I think it is a good question, and it's something that's been discussed a lot recently. I mean, I'd say just a couple of things, if I may. First and foremost, divestment is not the only way that we will reach our 40% reduction in production. We're also exploring less. In fact, we used to spend $2 to $3 billion a year exploring for new resources. Today, we're spending less than $500 million and have said that we will no longer explore for oil and gas in new basins. So that's number one. We're also investing less. We used to invest between 17 and $20 billion in the upstream. Today, we'll invest $7.5 billion this year. And along with that, there is divestment. So number one, it's not the only tool in the toolbox. It is part of the equation, but not the whole equation. And then the second thing, I think, is that who do we sell these to? Well, we sell them, I think, to responsible operators. People think that they're somehow immune from societal pressures or immune from the financial markets. That, of course, is not true. They're also having to borrow money. They're in the debt markets. And so they're subjected to the same societal pressures as the rest of us. And then the final thing I would say, Andrew, is what you do with the proceeds. And the proceeds from those divestments enable us to get our net debt down and enable us to invest into the transition, which is what we're doing over the next 5 to 10 years. And we're making great progress. We've entered offshore wind there in the United States with Equinor. We've just entered offshore wind here in the UK. We've got one of the biggest solar development companies in the world in Nightsource BP. We're in EV charging. The list goes on. So it gives you a sense of how we think, as you say, philosophically about the question of divestment.
Shepard Smith here. Thanks for watching CNBC on YouTube.